What if I told you that your weekly coffee habit could be the key to building a serious nest egg for your future? It sounds a little out there, I know, but in the next few minutes, I'm going to show you how a tiny amount of money, just $10 a week, can grow into a life-changing sum. Most people think you need a ton of cash to start building wealth, but that's just not true. You just need to know one simple secret, and by the end of this video, you will. The problem: why we think small savings don't matter. Have you ever looked at your bank account, seen a few extra bucks and thought, what's the point? It's only $10. So that $10 goes to a fancy coffee, a fast food lunch, or some random thing you saw online. It just vanishes, and you don't think twice. Honestly, who hasn't been there? We live in a world that's always telling us to go big or go home. We see stories about overnight millionaires and crypto kings, and it makes our own financial situation feel, well, small. It's a common belief that you need a huge pile of cash just to get started with investing. The idea of investing something like $10 a week feels like bringing a water pistol to a firefight. It seems pointless, almost silly. So we tell ourselves things like, I'll start saving when I get that big raise, or I'll invest once I have a few thousand saved up. But here's the tough truth. For most of us, later never really comes. Life happens. Unexpected expenses pop up, and that big pile of cash we're waiting for stays a dream. This mindset is the single biggest roadblock to building wealth. It's that little voice of doubt whispering that your small efforts don't matter. It's that feeling of being totally overwhelmed by finance and scared of losing the little you have. But that voice is wrong. Today, we're going to shut that voice down with cold, hard proof and show you that the most powerful force in finance is available to every single one of us, no matter how small we start. The journey to wealth doesn't begin with a lottery win. It begins with the decision to make your money work for you, even if it's just $10 at a time. The habit is so much more important than the amount. The revelation, the mind-blowing magic of compound interest. All right, this is the part that will change how you look at money forever. It's the aha moment. To get it, we first need to understand how money usually grows with simple interest. With simple interest, you only earn interest on the money you originally put in. It's fine, it's better than nothing. But now let's talk about the magic, compound interest. Albert Einstein is often credited with calling it the eighth wonder of the world. And for good reason. Compounding is just your interest earning its own interest. Think of it like a tiny snowball at the top of a very, very long hill. Let's go back to our example. You start investing $10 every single week. That's $520 a year. We'll assume you're not just putting it in a bank account, but investing it for a 7% average annual return, which is a realistic historical average for the stock market after inflation. Here's where that snowball starts to roll. After 10 years, you will have put in $5,200 of your own money, but your account wouldn't just be $5,200. It would be worth over $7,500. That's more than $2,300 of pure profit your money made for you. The snowball is still small, but it's picking up speed. Now let's keep it going for another decade. After 20 years, your total contribution is $2,400. You've been diligent, saving that $10 bill every week, but your investment account is now worth almost $23,000. You put in about 10 grand, and it has more than doubled. You've earned over $12,000 from growth alone. The snowball is getting bigger, and it's moving much faster now. This is where it gets truly amazing. Let's stick with it for one last decade. After 30 years of consistently investing just $10 a week, you've put in a total of $15,600. But your portfolio, thanks to the quiet, relentless power of compounding, would have grown to nearly $53,000. You contributed less than $16,000, and it turned into over $100,000. The growth did more work than your contributions did. Look at that difference. Your contributions are a straight, flat line, but the growth is an exponential curve that gets steeper and steeper over time. In the first few years, the growth is slow, maybe even a little boring. This is where most people get discouraged and quit. But the ones who stick with it, who understand that time is their greatest ally, are the ones who cash in. That's the secret. Consistency over time is the fuel for the compounding engine. If you're having that aha moment and this is starting to click, do me a favor and hit that subscribe button. My goal here is to make personal finance simple and easy for everyone, and your support helps this channel reach more people who really need to hear this. Schatten in the solution. Satradam Wisquainskan. how you can actually do this, starting today. Okay, so the numbers are pretty incredible, but you might have that nagging voice in your head asking, but how? I'm not some stock market genius. Isn't it risky? Where do I even put my $10? This is the most important part, because the strategy is way simpler and safer than you think. First, let's bust a myth. You do not need to pick the next hot stock. In fact, you probably shouldn't even try. The most proven strategy for beginners isn't about finding the needle in the haystack, it's about buying the whole haystack. We do this with something called a low-cost broad market index fund, which usually comes in the form of an ETF, or exchange-traded fund. Think of an ETF as a big basket that holds tiny pieces of hundreds, or even thousands of different companies. When you buy just one share of that ETF, you're instantly spread across all of them. So you aren't betting on one single company to do well, you're just betting on the entire economy to grow over the long haul. A few great examples are perfect for this. There's the Vanguard S&P 500 ETF, ticker symbol VOO, which holds the 500 largest companies in the US, and has an expense ratio of just 0.03%. That means you pay only $3 a year for every $10,000 you have invested. Another fantastic choice is the Vanguard Total Stock Market ETF, or VTI, which is even broader. If you want to own companies from all over the world, you could look at VT, the Vanguard Total World Stock ETF. The point is, these set-it-and-forget-it funds are built for long-term growth and are considered much safer than owning just a few individual stocks because your risk is spread out. Now for the how, it's a strategy called dollar cost averaging, DCA. It sounds fancy, but it just means you invest a fixed amount of money on a regular schedule, no matter what the market is doing. Your $10 a week is perfect for this. When the market is up, your $10 buys fewer shares. When the market takes a dip, your $10 automatically buys more shares for cheap. This takes all the emotion and guesswork out of trying to time the market, which is a losing game for most of us. You just keep buying week after week and let time and compounding do all the heavy lifting. And the best part? You can literally start today. Modern brokerage apps have no account minimums and offer commission-free trading for ETFs. Many even let you buy fractional shares. So if one share of an ETF costs $600, you don't need $600. You can just buy $10 worth of it. To get going, you open an account with a reputable brokerage, link your bank, and set up an automatic weekly transfer of $10 into an ETF like VOO or VTI. That's it. You've just put your wealth-building machine on autopilot. For an extra boost, look into opening a Roth IRA. It's a special type of retirement account where your investments can grow completely tax-free. For 2026, you can contribute up to $7,500 a year. We started this with a simple question: what can $10 a week really do? And now you know, it can be the seed that grows into a strong tree of financial security. It can become $50,000 or more, which could fundamentally change your future. The real secret to building wealth isn't about being rich right now. It's not about some complicated high-risk scheme. The secret is consistency. It's about building the habit of saving and investing no matter how small the amount. It's choosing a simple proven plan and sticking with it for the long run. It's understanding that time, not timing, is your most valuable asset. That $10 you might have spent without thinking has the power to work for you, to make money while you sleep, and to build a future you may have thought was out of reach. So the next time you think a small amount of money doesn't matter, remember the power of that snowball. Remember the exponential curve. Your financial future doesn't have to be something that just happens to you. It can be something you build, 1 week at a time. The best time to start was yesterday. The second best time is right now. Go start your snowball.